Industry expert Ms. Amrita has joined us. It is a pleasure to have you with us today. The question is, how is our portfolio affected during a market crash? And also, what should be the mindset of an investor to overcome a market crash? Can you explain this to us?
If your portfolio, basically is your portfolio like a falling knife or a falling mango? If it is like a falling mango, which means if it is very high on quality, there is market risk in the equities, and it will be there. Even if you are into the Reliance and TCS of the world, they will also correct, but they are good companies, correct? So it depends upon what kind of portfolio you are holding. If your portfolio is of bad quality and it's falling on account of markets, then you may want to get out of it. But if it is of good quality, then you may want to, we can't know to what extent the market might fall. You may want to put incremental amounts, either lump sum or at least start an STP to it. So not all, and always keep your nerves calm, because like for example, whoever invested in Jan 2009, they saw almost a 60% crash. But by November 2010, they had recovered their money. And if they stayed till now, they would have made a 9% return. Not a 12, 13% return, but a cool 9% return. Which, and with equity taxation of gains beyond 1 lakh, 10% taxation, it is quite a tax efficient route. So it depends upon your quality of investment. Stay for long term and invest incremental amounts.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free, and you can find the link in the below description. Please like and share, and do subscribe to Holistic Investment.